Well, good morning, everyone. Welcome to our Monday morning trading session. And what a Monday it is, day before the U.S. election, and we have opened up with a huge opening gap. It's obvious on all the tools. I'll just take a look here at the Eagle. You can see the market spiked through the overnight, left off down here, 46.60-ish, and yeah, open way up here, 47.34.35. Enormous opening range gap just below the market. So it's going to be interesting to see whether the market's going to try to get into that gap or whether that's going to just be like an expansion gap. I don't know. At this point, it's too early to tell. It's like I say, huge gap. Smaller gaps you expect to fill. Enormous gaps like that, it will fill. I just don't know if it will fill this morning. But we're going to give the market a few minutes here to settle in. We've got a lot of yellow bars clustering here on the hawk. So that's suggestive of a sideways range. And you can see the Falcon also flip-flopping quite a bit. How many ranges or zones have we moved here? 1, 2, 3, 4, 5, 6. Wow, 6 zones through the overnight. I don't think I've ever seen that. You may have to excuse me here for a couple of minutes, though. I'm fighting off a cold, and my nose is running like a tap. So excuse me just a moment. I'm going to be right back. Hi, sorry about that. Yeah, Tony says, is that a political gap? I don't know what else to blame it on. It's crazy. I'm tempted to say the market's going to pull into the gap. You could trade a breakout here. The market's obviously in a zone, and you could anticipate that perhaps a breakout would carry some follow-through with it. That's a doable trade. You could use your OCO orders, bracket above and below. Crude oil also has a slight gap up, but nothing like what we're looking at here at the NASDAQ. Here's crude oil. And they're also kind of drifting sideways for the most part. Yeah, Daniel says, because of the gap, my hawk chart is really small. Can I resize it? Yes, let's see if I remember how to do this. All right, so what you need to do is you'll grab your y-axis and you'll expand your chart this way. Then hold the control key on your keyboard and left click your mouse and pull your chart down. And then you can reformat it how you would like. If you condense your charts like I do, oh, actually that didn't work out too bad. I was going to say you can just hit your auto format button to bring everything into perspective. So we're starting the day relatively neutral. Like I say, a lot of yellow bars, a lot of sideways trading. Well, we're getting a first micro-macro cross signal here. Excuse me, we're also getting a buy signal here on the eagle, even though it's coming off of the soft edge. You could use this signal and initiate a second push on the buy. And all that means is we allow the signal to engage, and then we look to buy above the height of this current bar. So we know the current limit of the buyers, so you would set up to buy above here. Well, actually, that's probably not that bad of a trade. in the sense that we're going to end up covering below the low anyhow. Now this is one of those let's test the waters kind of trades. Let's see which way the wind is blowing. The Raptor did give us a double pullback. So the market pulls into the trading band, comes out, produces a signal, goes back, produces another signal. Look at this order flow though. This order flow is all over the map. A buying spike, a selling spike, buying spike, and now a more concentrated selling again. We do have a first micro macro cross signal here on the hawk. If you just wanted to try to get in and out for a scalp, well, stop should at least go back there. You can see we're trying to scalp up before we hit the top end of the trading range again. Because of all these yellow bars, because of the sideways nature of the market, I don't think you should get too heavy. Alright, so here they go. Not quite to the top end of the trading range yet, but we'll see what they do. If there's any follow through. Oh goody, it's around quarter to the hour. This is traditionally when the market may throw us a false signal. We'll see. Alright, Ryman asks, good morning, Eric. Would you please comment again on why you now have your data set at 5 days rather than 7? So what Ryman's referring to is here on the data feed. If we go to the data series, I set my data at, here for the session template, at default at 24/5. The other alternative is default 24/7. Well, mostly Ryman because Ben, who is one of the head programmers, said the data computes better on default 24/5. So that's one reason I do it. The other reason I do it is the Globex open on Sunday. Those few hours of trading sometimes are just enough to skew the numbers a little bit. And what I'm referring to are the numbers in particular on the support and resistance suite. If you're running the support and resistance suite and you're running your data on default 24/7, your numbers may be slightly different than mine. Now that's not a big deal in and of itself. We treat these numbers more as zones anyhow, rather than absolutes. but I find I get better performance on default 24/5. I'm really just interested in the 5 trading days themselves. Um, Before the overnight markets became more active, I would just follow a regular trading hour chart. Especially, well, this was more had to do with my end of day trades. And let me show you what that looks like. So I would run a regular trading hours. Okay, here we go. So this is a end of day chart for the NASDAQ, just the regular trading hours, and you can see there's quite a few gaps. Right? There's a gap down this morning, big gap up, gaps up, and so on. So this is more to do with the overnight sessions now. They're a little bit more active, and a lot of times we'll end up with these gaps as the market makes considerable ranges in the overnight. So to smooth things out, I would go to a continuous data chart. But again, I'm just interested in the session itself. That's where the bulk of the trading goes on. The volume on the overnight, probably part of the reason the market gapped as strongly as it did is because the volume was relatively light. I just think you get better results. That's really what it boils down to. Dan is asking, is there a way to set the default risk percentage? Yes, there is, Dan. So you go here into your strategies tab, and you select your trade manager. Before you activate it, if you already have your trade manager going here, you need to disable it. So go to false, and you need to remember to apply so that it removes it. Now you can make changes to your trade manager. Right here, volatility percentage, or risk/volatility percentage. By default, it's set at 1. I set mine at 2. You can also preset whether you want to click your targets or whether you want auto targets. Tick means auto target. And then you can even preset your target objectives. Currently, I'm all in, all out, 100% at target 1. But if you wanted to have a runner in, you could all the time, you could change that to 50%. You can preset as many as 3 targets. You can preset their objectives here. So I'm in 100% for 20 ticks. Once you have that to your liking, I would suggest that you save your template. So just click on here and give your template a name. I called mine Falcon because it's for the Falcon, but you can call it whatever. And this way, when you load a new chart, or you build a new chart, all you have to do is go here to your templates and select the template you want. So they're all preset then. You can make additional changes. One of the changes you may want to set is an auto break-even parameter. So by default, it's set at false. You need to turn it to true to enable it. And then set your break-even target and any offset that you would like. By default, it's set at 1. Traditionally, I think anytime the market gets around 75 to 80% of its profit objective, it's probably a good idea to roll to break even. So with a 20-tick target, I have a 15-tick break-even trigger. But you can make it more or less. Then when everything Like I say, it's to your liking. Save it. Save your template. Go back here to your Enable tab. Go now to True. Remember to apply it, or it won't show up, and you'll automatically have your risk percent preset. Yes, Steve wants to take a survey here. He says, let's have a survey. When Hillary wins, will the market stay the same? But if Trump wins, will the market go up or down? I think there's a whole lot of apprehension going on here. I read this morning about the FBI clearing something about Hillary's email scandal or something to that effect. I didn't read it all that closely. But they're saying that accounts for the huge uptick in the overnight. I don't know. We'll see. One thing, I don't think the markets really care whether they're Democrat or Republican, liberal or conservative. What the markets want to see is stability. The markets want to see a stable government. I can tell you, in Canada, we've had several minority governments, something that is not really possible in the US electoral system. But we've had minority governments where the leading party is in charge, but the opposition is strong enough that they can band together and squash whatever the government intends to do. That's hard on the markets. The markets don't know whether the country's going to get anything done. And of course, at the end of the day, the markets are nothing more than vehicle investments, or vehicle investments, investment vehicles for investors. Well, yeah, Akeem, you're absolutely correct. He says the markets will never stay the same. And he does a little winky face with that. Yeah, you're right. The markets will never stay the same. They always look for an excuse. You know, that's what humors me about the news is the news is always a step behind because they're trying to figure out why the market did this, that, or the other thing. It's going to be an interesting evening tomorrow, I can tell you that. I think everybody with a television set's going to be watching. And unless it's a blowout one way or the other, it has been a horse race, though, as most U.S. elections are, right down to the wire. Yeah, Akeem, I know. Akeem says this FBI news makes trading really difficult, and that's true because, well, the markets look for a reason to move, right? They don't move just because there's always a reason behind. We don't always understand the reason, but there's always a reason behind. They're reluctantly trying to trickle higher. I have a bad feeling they're just going to be moving sideways today. Nobody's going to want to commit to anything. And I have a bad feeling tomorrow's going to be even worse. Wednesday could be an interesting session. Yeah. Is that true? I didn't know that was true. Akeem says, since Donald Trump has no permission to Twitter anymore, we might see sideways markets until Wednesday. Yeah, I'm not sure his tweets actually drove the market, but it's an interesting observation all the same. Well, if things don't shape up here, we're not going to sit here just watch the paint peel, so to speak, but we'll give them a fair chance. If I suspect the market is at the very least going to test the top end of the overnight range. Excuse me, that bar being 47.39 3/4, essentially 47.40, which is also where you'll note the resistance line is. I didn't notice that before I placed the trade. It might have been prudent to place the order on the other side of that line. Again, you could do an OCO order, bracket above and below. We are getting some bullish sentiment, though. We're getting a trend change / late filter entry signal here on the Falcon. 4-arrow consolidation here on the Hawk. I do believe we have hit our scalp target. The Eagle and the Raptor both producing buy signals as well. And, well, that was good. A little bit of an uptick. They're testing the breakout. Oh, on, let's go. Come on. I'd love to do something with my stops, but it seems a little premature. Come on, get up there. Just checking some of the news channels, and they're just getting their last shots in. tell which ones are left-wing and which ones are right. That's one thing about the the news. They don't they try to seem objective, but they're not. Oh dear. It gives the talking heads lots to do, though, that's for sure. A lot of low-hanging fruit. Yeah, like Tony says, they don't even try to hide their bias anymore. Yeah, I know, Tony. I've done that too. Tony's bewailing. He says, I missed 2 trades this morning because I forgot to hit the submit button. Yeah, I know. Especially when the markets are slow like this, it's easy to do. You set your prices, you wait, you wait, you wait. Finally, the market moves up, and it's like, why didn't I get a fill? Oh, because I forgot to hit submit. That's why. Yeah, I know. I've done it too. Elmer's asking which news sites would I recommend for daily data and announcements on the news stream? Well, actually, none. About the only website I'll check on a regular basis is the Indicator Warehouse one, and that's only for the, they have a news calendar at the bottom. Adam actually should put this higher up, but right here you have economic calendar, or you can bookmark this page, and it will tell you any important reports coming through. And it has a tiny little flag here, but you can see those are American or US. Anything that starts US was obviously American. These are Chinese. These are having to do with the European markets and so on. Another good site for reports, if you don't want to use the one at Indicator Warehouse, is Forex Factory. They've been around forever. And their main page has all the reports as well. Actually, it looks like a few more. The Indicator Warehouse one just shows you the big ones. As far as news goes, if you're really interested in news, I just check the big ones, right? I check CNN for the left side of the arguments, and then I may switch over to Fox to see what the right side is saying. But I really read this stuff with a huge, huge grain of salt. This kind of stuff doesn't really influence the markets that much. That's more for my own personal amusement. Oh, Tony's volunteered one here. Let's see what this website is. Oh, this is a good one. Hold on. Here's an economic calendar. I like this one. mam.com, econoday.com. And I'll put that in the window for everybody. Yeah, Elmer says, sounds like you don't pay much attention to the news. No, I don't. I'm a firm believer that the news fits the markets, not the market fits the news. By the time you hear about it, the market has long since reacted to what's going on. This isn't a bad website. It shows you all the major reports. I am imagining that the big ones, it stars. Oh yeah, see, red star. Petroleum report on Wednesday. And if it's like most websites, it even allows you to change the time zone for your native time zone. That's a good one. I like that one. Thanks for sharing that, Tony. And Friday is a holiday. The banks are closed. The markets are open, however. I may not be here on Friday. We'll see how the week goes. Yeah, that's a good one. Thanks, Tony. I'm going to bookmark that just for my own use. There we go. All right, well, we're plotting, trying. All right, come on. They're slowing down a bit again. I think I'm going to get really, really aggressive with my stops here. I'm going to go with bar high low. There we go. That's all they're going to get. In fact, you know what? I may take this tighter still. There. Essentially a break-even trade. We're up a few dollars here. We hit our scalp target and then some. But I don't feel much like giving anything back. especially since I don't think we're going to get any follow through. Well, I'm glad they're starting to see things my way. We're getting a little bit of follow through here now. Moses, I'm not entirely sure what you're asking. Moses asked, can you show how you take that trade setting, your own price and target, please? Oh, how do you take a trade with setting your own targets? Sure. Pardon me. You go here, automatically I've set mine to be tick targets by default, but you can click your targets as well just by clicking this tab. So when it's on click targets, let's say you want to set up and take this first micro macro cross signal, and let's say you want to put your stop here. Now you can also click for your profit target. So let's say you want to take something that looks like about 2 times your profit objective. There you go. That could be your trade. If you only want to trade a certain quantity every time, say for instance you want to trade 3 contracts, you go up here, you set your 3 contracts. Now you can enter your order one of 2 ways. You can either right click on your chart and put in your orders. These orders will be live the moment you put them on your chart. Alternatively, you can switch here to manual mode. In which case you could enter your entry, set your stop loss, and then once again you can click for your profit target. And you will always end up trading 3 contracts, or whatever this amount is up here. The danger with doing that, however, is you can see how this affects your stop. I know from experience that a 2% stop will max out my risk at around $400. So in this case, I'm risking probably about 3% of my account, which is still doable. It's not unreasonable. But things start to go sideways when, say, you start to risk down here. Now you end up risking perhaps an inordinate amount of capital. Whereas the risk percent mode always caps your risk exposure. This way your risk will be whatever it works out to based on the number of contracts you trade. So I hope that was the question you were asking, Moses. If not, please clarify, and I would be happy to try to answer for you. Yeah, Ryman's got a news indicator loaded on his NinjaTrader 7 platform. Let's see whether or not I have that one as well while we're waiting here. So it's JTE Con News. No, I don't think I have that one, but we'll see. I might and not even know it. No. But I have heard of those. They are news feed indicators, and I'll share the one that Ryman uses in case anybody is interested. He says it's a free indicator. Well, that's always nice. So if anyone's interested, there you go. You can get a lot of these free indicators at the NinjaTrader website. And just 1 second while I try to get that for you. Well, NinjaTrader has a calendar also on their website with expiration dates. That's helpful. That's not what I'm looking for, though. I'm looking for the NinjaTrader. Looking for the one that's on the NinjaTrader. Oh, here we go. NinjaTrader support forum. All right. So it's ninjatrader.com support forum. This is an interesting little website. You need to register for it, but it's not a big deal. They don't spam you or anything like that. And where is it now? If you search, oh, here you go. You can search NinjaScript files. And there you go. There's the one that Ryman was just talking about. Looks like it gives you a little window with the news. And there's a whole lot of cool indicators here. Anything that your heart desires. And then some. I'll check. Ryman says check under your economic calendar. All right, let's check under the E's. No. No, it looks like you added that one in there at one time or another, Ryman. Akeem says you can also get it at Big Mike's forum, but I always like to go to the source, so I tend to gravitate toward the NinjaTrader website. Um, Dan's asking, what's the best data feed? I'm using NinjaTrader Continuum, but I see a lot about Kinetic. I'm using Continuum as well. I think actually Continuum and Kinetic are partner companies. Don't quote me on that, but I think they're related in one way or another. And regarding best data feed, well, they all have their pros and cons. So long as the data is accurate, that's really all that matters. And it's to the point where I don't think it really matters that much whether you're using Continuum or Kinetic or CQG, or it's really whatever your broker is providing. Whatever they don't charge you extra for. that's usually my dividing line. Are you guys gonna charge me extra for this? Yeah, okay, no thanks, I don't want it. Well, yeah, see, like Tony says, he's using CQG and it works fine for him. Ray Burke always used CQG and he never had issues with it. His broker was AMP, and I think most AMP brokerages use CQG. But they're all good, they all work. About the only thing that varies is their base mix, the base markets that they include. Uh, Back in the days when Zenfire still existed, I think they probably gave the largest uh, market mix. I could get everything under the sun with Zenfire. I still can with Continuum, but I have to pay extra for everything. That's the sole reason I don't show the Russell, because I didn't feel like paying extra for a Russell data feed. And yes, it's not a lot of money, but I don't trade the Russell that much anyhow. As often as I would trade the Russell, I can go to the mid cap, the EMD. It seems like there's always an alternative somewhere. All right, boys and girls, I think we're going to close up shop here. Yeah, see, like Tony says, the fee for the Russell went way, way up with CQG. I haven't followed it up, but I know they were talking about moving the Russell to the CME, to the Merc, which would pretty much, well, it would include it with the S&P, the NASDAQ, the mini Dow, get it off of the ICE exchange. That was the talk, but, you know, like most rumors, it's not always much to it. I think we're going to close up shop, though. Unless anybody has any questions, there's really not much point in hanging around today. It looks like the market may eventually hit our profit objective, and I'll tell you, I will be happy to get it. In fact, I may even enter exit. Oops. I better lock that. I'll exit early. There we go. Flash me $150 and I will say thank you very much. See you later. So we've hit that already, or just kissed it, but let's see if they come back and don't give it to me again. Well, folks, I guess we'll try to do this all over again tomorrow, but I suspect it will be more of the same. But we'll see what they're doing anyways. All right, I'll catch up with you tomorrow then. Bye for now.